Welcome back to Ripple Insider, your daily source for the biggest XRP updates, crypto market trends, and institutional moves shaping the future of digital finance. Today's story is a massive one for the XRP community, because while the market is flashing red and XRP is struggling to hold momentum this week, Ripple itself keeps climbing higher behind the scenes. The company just secured another major recognition in the business world, locked in a powerful new institutional partnership, and continues attracting serious attention from large investors and ETF firms. And here's the interesting part. Even though XRP is down around 4% this week, many analysts believe the current weakness may actually be setting the stage for something much bigger. We're talking about whale accumulation, institutional capital flowing into XRP-related products, and technical setups that some traders say look similar to the conditions before XRP exploded hundreds of percent in previous cycles. So today we're breaking down Ripple's latest achievements, the new Ripple Prime partnership, why ETF demand is quietly growing, and why analysts think XRP may still have explosive upside despite the recent price pullback. Ripple is once again finding itself in the spotlight after being featured in one of the most respected business rankings in the world. Just days ago, CNBC released its updated list of the top 50 disruptor companies for 2026, highlighting firms that are transforming industries through innovation, rapid growth, and long-term impact. Ripple secured the 16th position on that prestigious list, and what makes this even more impressive is the number of major companies it outperformed along the way. Ripple ranked ahead of names like Canva, Revolut, and several other rapidly growing technology firms. That tells you something important about how Ripple is now viewed outside the crypto bubble. This is no longer just a blockchain startup trying to prove itself. Ripple is increasingly being recognized as a global financial technology powerhouse that is influencing cross-border payments, liquidity infrastructure, and institutional finance. At a time when many crypto companies are still battling uncertainty, Ripple continues earning credibility from mainstream financial and business institutions, and that growing reputation matters more than many investors realize. What's also fascinating is who ranked above Ripple on the CNBC list. Companies like Anthropic, OpenAI, and Databricks occupied the top spots, showing how dominant artificial intelligence has become in the global tech race. Yet despite the overwhelming AI hype, Ripple still managed to secure a top-tier position among the world's most influential private companies. That says a lot about how seriously institutions are now taking blockchain-based financial infrastructure. Ripple's technology is not just being discussed as a future concept anymore. Banks, liquidity providers, and financial firms are actively exploring and integrating blockchain solutions, and Ripple has positioned itself right at the center of that conversation. This recognition also comes during a period where regulatory clarity around crypto is improving in several regions, which could further strengthen Ripple's position in the financial industry. For XRP holders, these developments matter because strong institutional trust in Ripple often translates into stronger confidence around the broader XRP ecosystem over time. And the momentum doesn't stop there because Ripple also recently secured another major achievement earlier this month. The company was included among the top 10 entities on the Prime Unicorn Index, where it ranked 6th with a valuation exceeding $26 billion. That is an enormous number and places Ripple among some of the most valuable private companies in the United States. The Prime Unicorn Index tracks high-growth private firms worth over $1 billion and acts as a benchmark for financial products tied to these companies. Right now, the index includes more than 230 companies with a combined valuation exceeding $3.4 trillion. Leading the index is SpaceX, valued at over $1.2 trillion, which shows the scale of the competition Ripple is standing beside. The fact that Ripple continues ranking among these elite companies, despite years of legal pressure and market uncertainty, shows just how resilient the company has become. Many people once believed Ripple's legal battles would permanently damage its growth trajectory, but instead, the company appears to be emerging stronger, more connected, and more institutionally respected than ever before. Now let's talk about one of the biggest developments that could directly impact Ripple's long-term expansion plans: the latest Ripple Prime partnership. Ripple Prime, which serves as Ripple's institutional-grade prime brokerage platform, recently announced a collaboration with EDX Markets and EDX International. This move is significant because it gives institutional clients access to EDX's spot and perpetual futures liquidity for cryptocurrencies within what Ripple describes as a unified and capital-efficient framework. In simpler terms, Ripple is building deeper infrastructure for large-scale institutional trading. These are not retail-focused services aimed at casual traders. These are systems designed for hedge funds, asset managers, liquidity providers, and professional institutions that need reliable access to digital asset markets. The more Ripple integrates itself into institutional trading ecosystems, the stronger its influence becomes across the crypto industry. Institutional adoption is often slow and methodical, but once major financial players commit to infrastructure partnerships, they rarely reverse course quickly. That is why many XRP supporters view these developments as long-term bullish signals rather than short-term hype. Michael Higgins, the international CEO of Ripple Prime, also emphasized how important this collaboration could become moving forward. One of the most exciting parts of the partnership is that it may eventually pave the way for future integration of Ripple's stablecoin, RLUSD. Stablecoins are rapidly becoming one of the most important sectors within digital finance because they allow institutions to move capital quickly while maintaining price stability. If Ripple successfully expands RLUSD adoption within institutional trading environments, it could create an entirely new layer of utility around Ripple's ecosystem. And remember, Ripple is not entering this phase empty-handed. The company recently secured a massive $200 million debt facility from Neuberger Berman through its specialty finance division. That fresh capital is expected to help Ripple Prime scale operations, improve liquidity services, and onboard more institutional clients globally. When you combine strategic partnerships with new financing and growing institutional recognition, you begin to see why many analysts believe Ripple is positioning itself for a much larger role in global digital finance over the next few years. At the same time, one of the strongest bullish indicators for XRP right now may actually be happening quietly in the ETF market. According to recent data from So Value, spot XRP ETFs have been attracting steady inflows over the past several weeks. In fact, the latest major red day for these products reportedly occurred back on April 30th, meaning institutional interest has remained surprisingly resilient, even while the broader crypto market has experienced periods of weakness. What makes this trend especially interesting is that spot Bitcoin and Ethereum ETFs have recently seen more pressure and outflows by comparison. That suggests some institutions may now be looking at XRP as an alternative growth opportunity within the crypto sector. ETF demand matters because it represents regulated institutional exposure to digital assets. Pension funds, hedge funds, family offices, and professional asset managers often prefer ETFs because they provide exposure without requiring direct custody of cryptocurrencies. As more capital enters XRP-related investment products, it increases overall market confidence and strengthens the long-term investment narrative surrounding XRP. Several major financial firms are already involved in the XRP ETF space, including Bitwise, Franklin Templeton, Grayscale, and 21 Shares. Together, these firms have reportedly brought in nearly $1.4 billion in net inflows since the products launched. That is not small money. These are heavyweight financial institutions managing billions in client assets, and their continued participation shows that XRP is being taken increasingly seriously by professional investors. This growing institutional footprint could become one of the key catalysts for XRP's next major rally if market conditions improve. Historically, crypto bull runs become much stronger when institutional capital enters aggressively because institutions provide deeper liquidity and more sustained buying pressure than retail traders alone. While short-term volatility remains high, the broader institutional trend around XRP appears to be strengthening rather than weakening. Even with all this positive institutional momentum, XRP itself remains under pressure in the short term. The token is currently trading around $1.36 according to CoinGecko, reflecting a weekly decline of roughly 4%. For many retail traders, seeing red candles despite bullish headlines can feel frustrating. But this kind of divergence between price action and underlying fundamentals is not unusual in crypto markets. Often, the biggest institutional moves happen quietly before the broader market catches on. Some analysts even argue that XRP's current consolidation phase resembles previous periods where the asset built momentum before explosive breakouts. Crypto markets are heavily influenced by sentiment, liquidity cycles, and macroeconomic conditions, so short-term price weakness does not necessarily invalidate the larger bullish case. In fact, several well-known analysts believe XRP may be approaching a critical technical zone that could determine the direction of its next major move. One analyst, known as CoinForge, recently described XRP's current setup as insane, arguing that the asset is sitting at a level similar to the one that previously triggered a 700% rally. Now, of course, no prediction is guaranteed in crypto, and traders should always manage risk carefully. But comments like these show that market optimism around XRP remains extremely strong despite recent weakness. Another analyst, Javon Marks, suggested that XRP is still holding a major breakout structure against Bitcoin and could potentially outperform by nearly 800% under favorable conditions. These kinds of forecasts naturally attract attention because XRP has historically been known for explosive moves during bullish market phases. While critics often dismiss ambitious price targets, XRP's history proves that the token is capable of dramatic rallies once momentum returns. The key question right now is whether institutional accumulation and ETF inflows will eventually translate into stronger spot market demand over the coming months. Adding even more fuel to the bullish narrative is the recent surge in whale activity. Popular crypto analyst Ali Martinez revealed that large investors accumulated more than 71 million XRP over the last week alone. Whale accumulation is closely watched in crypto because it often provides clues about how sophisticated investors are positioning themselves. Large holders typically have access to deeper market analysis, institutional networks, and longer-term investment strategies. When whales begin accumulating aggressively during periods of weakness, many traders interpret it as a sign that smart money expects higher prices ahead. Of course, whales are not always right, but historically, heavy accumulation phases have often preceded strong market moves. Smaller investors also tend to follow whale behavior closely, which can create additional momentum once confidence begins spreading across the market. If accumulation continues while institutional ETF demand remains strong, XRP could find itself entering a much more favorable environment heading deeper into the year. Another factor investors are watching closely is the broader crypto market environment. Bitcoin and Ethereum have recently experienced periods of volatility, and macroeconomic uncertainty continues affecting risk assets globally. Interest rates, inflation concerns, and regulatory developments all play a role in shaping investor behavior across crypto markets. However, XRP's situation appears somewhat unique because Ripple's business growth continues advancing regardless of short-term market fluctuations. That separation between Ripple's corporate expansion and XRP's short-term trading performance is important. While many cryptocurrencies rely heavily on hype cycles and retail speculation, Ripple continues building institutional relationships, infrastructure products, and financial integrations behind the scenes. Over time, those business developments could help create stronger, utility-driven demand for XRP and related products. Investors who focus only on short-term price charts may miss the bigger institutional transformation happening within Ripple's ecosystem right now. There is also growing discussion within the crypto community about how regulatory clarity could benefit XRP moving forward. Ripple has spent years navigating legal battles and regulatory challenges, but many analysts now believe the company is entering a much stronger position politically and institutionally. As governments around the world continue developing frameworks for digital assets, companies with established compliance systems and institutional credibility may gain a major advantage. Ripple has consistently emphasized regulatory engagement and enterprise adoption, which could position it well in a future where compliance becomes increasingly important across the crypto industry. If institutional investors become more comfortable with XRP-related products under clearer regulations, the amount of capital entering the ecosystem could increase substantially over time. That possibility is one reason many long-term XRP supporters remain optimistic, even during periods of short-term market weakness. What's especially interesting about this current market phase is the disconnect between retail sentiment and institutional behavior. Many retail traders are nervous because XRP has not delivered the explosive gains they expected recently. But institutions appear to be steadily increasing exposure through ETFs, partnerships, and liquidity infrastructure. This difference in perspective often happens during transitional market periods. Retail traders typically react emotionally to short-term price swings, while institutions focus more on long-term positioning and infrastructure growth. The fact that Ripple continues securing partnerships, financing, and recognition from mainstream financial organizations suggests that institutions may be viewing the current market weakness as an opportunity rather than a warning sign. If that institutional confidence eventually spills into broader market sentiment, XRP could experience a powerful shift in momentum. For XRP holders, the coming months may become extremely important. The combination of ETF inflows, whale accumulation, institutional partnerships, and growing corporate recognition creates a narrative that is difficult to ignore. While short-term volatility is still very real and price swings remain unpredictable, the underlying developments around Ripple appear stronger than they have in years. Investors will be watching closely to see whether XRP can reclaim key resistance levels and convert growing institutional demand into sustained bullish momentum. If broader crypto market conditions stabilize and institutional flows continue increasing, XRP may find itself in a much stronger position than many traders currently expect. So while XRP may currently be trading in the red, the bigger story unfolding behind the scenes is one of expansion, institutional adoption, and long-term positioning. Ripple keeps securing strategic wins. Major financial firms keep increasing exposure to XRP-related products, and whales continue accumulating during market weakness. Whether or not a major breakout happens immediately, it is becoming increasingly clear that Ripple is not slowing down. The company is building aggressively, institutions are paying attention, and the XRP ecosystem continues evolving despite market uncertainty. And in crypto, sometimes the biggest opportunities emerge precisely when sentiment feels uncertain. That's why many investors believe the current phase could eventually be remembered as a quiet accumulation period before the next major move. Stay locked in with XRP Insider because the XRP story is evolving fast, and the next big development could arrive at any moment.